All right, let's talk taxes. I know, but tax season is just around the corner. And if you're already feeling that little bit of deadline dread, you are in exactly the right place. Today, we're going to break down everything you need to know about the 2026 tax deadlines so this year can be your smoothest one yet. You know that feeling, right? The thought of tax day pops into your head and your stomach just sinks? Well, you're definitely not alone. It's a huge source of stress for millions of us. But honestly, the best way to beat that anxiety is to have a clear plan, and that all starts with knowing the key dates. So here's our game plan. We'll start with the main event, April 15th. Then we'll untangle how extensions really work. We'll look at federal versus state deadlines, cover another crucial deadline for your retirement savings, and finally, look at what it actually costs to be late. By the end of this, you're going to feel so much more confident. Okay, let's dive right in. First up, the countdown to April 15th. This is the big one, the main event of tax season. So let's map out the key dates you need to know. The whole season really kicks off around the end of January. That's when your employer has to get you your W-2s and other income forms like 1099s. Once you have those, the clock is officially ticking towards the big day, April 15th. That's your deadline to file and to pay. And for those of us who need a little extra time, there's that final deadline of October 15th. But we'll get to that in just a minute. Now, here's something really important to circle on your calendar for 2026. Sometimes, a weekend or a holiday gives us an extra day or two. Not this year. Tax day is landing squarely on Wednesday, April 15th. It's a firm date. No wiggle room, no buffers. That's the day. But what if you already know you're just not going to be ready by April 15th? Well, that brings us to one of the most misunderstood tools in the taxpayer's toolkit, the extension. Let's break down what it really does and what it doesn't. Okay, this is absolutely crucial. An extension gives you more time to file. It pushes the paperwork deadline a full 6 months, all the way to October 15th. But, and this is the part that trips up so many people, it is not an extension to pay. There's no such thing. The IRS still expects you to pay any taxes you owe by that original April 15th deadline. So how do you actually get one? It's surprisingly simple. Step 1, you file Form 4868, and you gotta do it by April 15th. Step 2, and this is key, you make your best guess of what you'll owe and pay that amount by April 15th. Do those two things, and voila, you've bought yourself until October 15th to get all your documents in order and file your final return. Now, it's so easy to think that once you've figured out your federal taxes, you're totally done. But hang on, the IRS isn't the only game in town. You also have to think about your state. The good news is, most states that have an income tax like to keep things simple. They just align their deadline with the federal date of April 15th. But there are always a few outliers, a handful of states that do their own thing. And if you live in one of them, you really need to know your specific deadline. And here are the key ones for 2026. If you're in Delaware or Iowa, you get until April 30th. Hawaii gives you until the 20th. Virginia pushes things to May 1st. And look at Louisiana. You've got until May 15th. Now, it is always a good idea to double check with your own state's Department of Revenue, but these are the main exceptions to watch out for. Okay, let's shift gears for a second. There's another super important deadline that also lands on April 15th. But this one isn't about filing last year's taxes. Nope, this one is all about planning for your future. We are talking about the IRA contribution deadline. That very same April 15th date is your absolute last chance to put money into a traditional or Roth IRA for the previous tax year. That's 2025. It's such a powerful tool for boosting your retirement savings, and it could even lower your tax bill for that year. And I really want to hammer this point home. That tax filing extension we just talked about, it does absolutely nothing for your IRA. You do not get more time to make your 2025 IRA contribution. That April 15th deadline is set in stone. It's a use it or lose it opportunity for that tax year. So we've gone through all these critical dates. But what happens if you miss them? Let's talk about the real consequences, the actual cost of being late, the penalties. Okay, get ready for this because this is so important to understand. There are two big penalties. The failure to file penalty is a painful 5% of your unpaid taxes for each month you're late. But the failure to pay penalty, it's much smaller, only 0.5% per month. The big takeaway is that the IRS will penalize you 10 times more for not filing than for not paying. So here it is, maybe the single most valuable tip for anyone stressing about their tax bill. If April 15th is coming up and you know you don't have the money to pay what you owe, you still need to file your return or at least file for an extension. Just by getting that paperwork in on time, you completely avoid that massive failure to file penalty. It could save you a ton of money. But what about the flip side? What if the government actually owes you money? Well, the situation is completely different. There's zero penalty for filing late if you're due a refund. But think about it. You're basically giving the IRS an interest-free loan with your own money. And don't wait too long. You only have a 3-year window to file and claim that refund before it's gone forever. And that really brings us to our final thought for today. Tax day shouldn't be this once-a-year, 24-hour panic. The real secret to a stress-free tax season is making your finances part of a year-round conversation.